Thanks, Bhate. Thank you, gentlemen, for joining us here in Transform to Next, brought to you by Wurth IT in association with Greyhead Media. Now, digital necessarily implies speed, but it is equally critical that our processes to turn to digital are done swiftly and holistically. Now, how should businesses think when it comes to transformation, and how can this process ensure an all-encompassing change? Our CXO panel is set to explain how the speed of transformation is the real new enterprise edge. Please welcome Sreejit Menon, the CEO of Indostar Finance, in conversation with Abhishek Bhate, the MD and CEO at Wurth IT India. Welcome back, Abhishek, and take it away.
Thanks a lot, Ashwin. Sreejit, very good afternoon. It's a pleasure to have you here with us, and we're very excited to hear your perspectives on how you are dealing with the headwinds in your industry.
Thanks, Abhishek. It's a pleasure to have this fireside chat with you, and it's actually the right time to talk about this subject because we've gone through something pretty unprecedented, not just in our country but across the world. And I think things are looking better now. In fact, I'm in the lending business now for the last 2 decades. We've seen multiple cycles. But we haven't seen a cycle quite like this. And we've basically seen 2 waves in a matter of 1 year, both probably as devastating as it can be for anybody. But the future looks bright.
And, that's awesome.
I think we should be all positive about that.
That's the idea. That's the idea. Right. So I'll lay it out straight for you, right? So NBFCs have been a vital cornerstone of the Indian financial ecosystem as important financial intermediaries, channelizing savings and investments, especially for underserved areas and unbanked sectors of the Indian economy. As a business leader in this space, how have you seen this evolve, and what trends do you foresee?
So Abhishek, I'll have to take you a little back into how the NBFCs started. The whole concept of NBFCs, or shadow banks, as we call it, in India started around the 60s. And traditional savings methods were not available for people, especially in the rural areas and the far-flung areas. So you had things like chit funds where people used to save money into. And we had companies that were organizing these chit funds. And you had what you would call as local money lenders who used to help get money onto customers from the rural sector to start their business. So if you ask me, the true evolution of the NBFCs actually happened somewhere in the 80s, when non-banking finance companies actually started coming into vogue. So NBFCs, largely, if you classify them, we have 3 or 4 categories of NBFCs. You have an asset finance company, which essentially lends against an asset like a vehicle finance or a construction equipment finance. You have a housing finance company, and I represent the housing finance business, which essentially lends against a mortgage of a house. You have an investment company which helps lend against large infrastructure projects. And we've all heard about the IL&FS saga in 2008.
Yes, we have.
And you have the microfinance companies, which just essentially lends to the rural and the urban poor. So you'll be surprised to know in the 90s, there were about 30,000 registered NBFCs.
Wow.
How many NBFCs that we had back in the 90s? And so pretty much anybody who had some capital could open up an NBFC.
Mm-hmm.
But if you look at how things have evolved over the last 2 decades, today we have about registered 9,000 NBFCs as on January, okay, which are into some form of lending. But within that, there are about 50 non-banking finance companies which are of prominence in terms of scale. Mm-hmm. And these companies effectively control about 85% of all assets that are lent into the system. So I would say it's been a very important part of the financial system because it's essentially helped those people from the informal segment really not just channelize savings, but actually become a part of the financial system, take loans and grow their businesses or buy their houses.
Right. So housing finance companies, I think they've seen a rebound in the country with a growing borrower base, government impetus for affordable housing, and an addition of millennials, right? What opportunities does it present for an NBFC, HFC like yours?
Housing finance is probably the most, I would say, the biggest sector within the NBFC space. Just to give you context, nearly 20 trillion rupees has been financed so far in the housing finance segment across banks and housing finance companies. 20 trillion. And we still are only about 10% of the GDP. Now, if you take countries like China, the mortgage penetration to GDP is about 20%. So China is double. And if you take the advanced economies like US, it's close to 65%.
Whoa.
We have a huge opportunity of housing finance, even though we've kind of traveled a long distance over the last 4 decades. And within housing finance, 90% of housing is actually targeted towards the low income segment and the economic weaker segment, which, by the way, represents most of India.
Yeah.
And what's happened, Abhishek, is that over the last maybe 10 years, maybe a decade, we've started seeing housing finance companies started focusing on the informal segment. We never focused on the informal segment because it's very difficult to underwrite informal sector customers and lend large amounts of money over a longer time frames, right? So your traditional banks and housing finance companies never served them. But over the last 10 years, you saw mushrooming of NBFCs and housing finance companies focused on this segment. Let me tell you, there are about 100 housing finance companies registered today under the National Housing Bank, which is our regulator. Out of the 100, the last 25, 30 that have acquired licenses have all acquired licenses to focus on affordable housing. Now, what has happened is pre-COVID, in fact, let me take you a little before COVID. 2016 is when demonetization happened, right? And demonetization pretty much broke the back of the real estate business because, as you know, real estate was largely a cash-driven
totally
economy. So you had a lot of the small developers go out because of demonetization. And that definitely affected the real estate business. Once we were getting out of the whole demonetization piece is when the GST piece came about, right? So the introduction of GST, the introduction of the goods and service tax, again increased the cost of operations for developers. And so that was the second regulation that impacted the housing finance industry, the housing industry. Then we had RERA, which was a very important regulation. As you know, housing finance never had a regulator. Housing never had a regulator. So you could buy into a project and you never knew whether the approvals were in place, whether the plans were vetted by a government, and you pretty much went on the reputation of the developer. And RERA really bought that transparency, right? But then the crisis happened in 2018, starting with ILFS and followed by DHFL. So what happened is housing finance companies could earlier leverage 10 times of their capital in lending to the housing finance customer and building a balance sheet. So if you had 1 rupee of capital, you could take 10 times as debt, and the regulator allowed that, and build a balance sheet and acquire assets. And so your return on equity, which is the measure by which all of us are looked at by the outside world, was great because you could leverage. Post the ILFS crisis, post DHFL crisis, the regulator woke up and reduced the leverage that on your capital. So pretty much the leverage is reduced by half.
Really?
So earlier, if you could borrow 10 rupees against 1 rupee of capital, now you can probably get about 5 rupees against 1 rupee of capital. And if you want to lend beyond 5 rupees, you got to put 1 more rupee of capital. So what that has done is it's pretty much consolidating the sector, and it's ensuring that some of the smaller players probably have to shape up or go off and merge with the larger players, and only players which have equity will be the players who will survive and thrive in this new world. Thankfully for companies like us, we have a strong promoter, which is Brookfield, one of the world's largest private equity fund, which has backed the group and the company with equity. So we are in a great position, even post-COVID, to be able to really build on the balance sheet and build on the assets.
Sounds fantastic. And the next question obviously would be, in the same thing. I was just reading a RBI report on the NBFC scene in India, right? Talks about the muted demand, the muted credit demand because of the COVID headwinds, and how NBFCs have continued to disburse credit despite disruptions caused by the pandemic. And I'm sure you've done great. Also, you keep, I keep reading about your company. So, has this been a business model change, or how have you really adapted yourself? Tell us more about what's shaping this financial industry and how you're getting around this pandemic.
I think the first thing that happened because of the pandemic is that the whole concept of risk management has really come into focus. And what the pandemic has done is really relook at your old originating principles, relook at all your underwriting methodologies, and throw it out of the window and really evolve your risk management models to be able to adapt to the new world. So from a housing finance perspective, there are three things that we really look at. We look at the whole sourcing journey, which is onboarding the customer. Once you've onboarded the customer, the whole underwriting aspect of it, which is determining the right loan amount, what's the right collateral, and then the customer service, which is essentially building that relationship over a longer time frame. All of these aspects really have evolved and got accelerated because of the pandemic. One clearly is that the whole concept of brick and mortar, the whole concept of paper and files moving between branches is getting replaced by digital scan-based models. So the whole paper process is getting replaced and becoming paperless, right? Underwriting is becoming more and more evolved basis the machine learning that is being put in place, basis the various algorithms that are now available, the scorecards that are getting built in. So the underwriting is no longer a very standard underwriting that we followed in the past. Every transaction is getting underwritten basis the behavioral aspects of that transaction. And of course, the customer relationship is the key now. The segment that we serve, there is very little information that is available through documents. And so you have to make an educative assessment on the basis of the personal discussion and the various data points that's available with you. And so data management has become another big aspect of the COVID. How are you able to access data? How are you able to manage data? How are you able to make sense of the data, derive insights, and make real-time decisions to be able to create a portfolio which can withstand any shock, including the shock that we've seen in the last year?
Well, you just stole the words out of my mouth. Well, you've almost heralded the digital transformation of your company, looks like, right? And in a fantastic way. I keep talking about this. It's a favorite topic of ours. I'm sure you backed it up with business transformation of the company. It was not just about the digital transformation, right? It's not only the technology that needs to change, it's also the people, right? And I'm sure you would have thought about the digital first platform that you're probably trying to build, changing your processes to adapt to how your financing, your contracting, your smart collections need to happen. And then how, with all these changes, you probably deliver superior customer value. And can you tell me more about whether this is a correct statement that you've done this to become this digital first NBFC? And how have you led this digital transformation in your company?
Actually, digital transformation, a very the sentence that is used now is a misinterpreted kind of
Totally.
A word, and what does it really mean when you say you're digitally transforming? There are a lot of people are digitizing their processes.
Correct.
They think they're actually transforming themselves.
Yeah.
To me, digital transformation is really how the customer views you. What's the customer's experience of transacting with you relative to what his experience was in the past? If that experience has undergone a dramatic change by virtue of how you're interacting with him digitally, then that's in true sense digital transformation. So just being paperless does not really ensure digital transformation.
True.
The fact that customer can do all of the transaction without any assistance and directly interact with you and get a loan with very little friction to do it is, to my mind, digital transformation. So that's the way I look at digital transformation. And you are absolutely right. Digital transformation is not just about introducing new technologies and then plugging those technologies and making it fashionable so that you can get into board meetings and talk about how you use that we all talk about these days, right?
True.
Digital transformation really is about changing the culture of the organization.
Mm-hmm.
And it's not about changing just a few people, it's about changing the entire organization.
Absolutely. My 2 cents here, obviously, you're the expert with your company. I think in my earlier keynote, we talked about these digital pivots that you need to, really deploy to stay relevant. If I want to break down the digital transformation story of any organization, it has to be these 4 or 5 really very critical pivots, namely how your infrastructure is secure and available. It has to be permeable to all processes. It has to be available everywhere. Rightly so, cloud is the new way to go, right? How you use cloud is depending upon the organization. I'm sure we can talk about it a little later. Data, you use the right word, data, the new oil, right? What sense do you make of data? Is it in silos everywhere? Is it uniformly available and accessible to everywhere? How are you making sense of that data, right? Obviously, the open API framework and a microservices architecture that you're able to deploy so that you're not creating monolithic systems which are not talking to each other. It has to be across the organization. The services have to be across the organization. Workflows that depend upon intelligence that you're able to build in. And obviously, customer experience. It has to be unified. It has to be unified to the customer. Doesn't matter what channel you reach out to him or her. It has to have the same feel, look, and the fantastic experience that you're able to give. So with you on that, these are the same things that we have been talking about through the day. And one last point, obviously, is give us a sense of the IT architecture and companies like you are adopting to negotiate this new business paradigm. What is your take on build versus buy? Do you favor one or the other? Are you trying to build a lot of systems? Are you going for best of the breed? And how do you get future ready with this, right? And lastly, like one more question I'll throw in there. New technologies, emerging technologies. Everybody likes to use the word AI, ML, cognitive science. What are you doing with those?
So let me take, you have thrown multiple questions to me, Abhishek. Let me take it one by one.
Mm-hmm.
Firstly, this whole argument of build versus buy. I'm very clear, we're not a IT company.
Mm-hmm.
We are into the business of housing finance and we'd like to just stay focused on that. And hence, we would not like to build as much in-house, as much as we would like to depend on strong partners who can provide us that architecture. Now, when you look at a lending company, there's a loan originating system and there's a loan management system. If you look at all the innovation, the loan management system is supposed to be a very steady system, right? It should throw up the numbers in the right way. The numbers should get into the financials in the right way and should be able to produce the output in terms of the right P&L and the right interest calculations. And there hasn't been too much innovation around the loan management systems. I think we have some pretty steady loan management systems, and you wouldn't have seen too many changes happening in that. What has really changed is the whole loan originating system platform. And I think that's where the legacy systems are now getting replaced by what we call as the agile, mobility-based low-code platforms, where you're able to create dynamic workflows, you're able to configure various rules on top of that, and you're able to create multiple API architecture. And of course, cloud enables you to do all of that, which you will not be able to do in the other environment. So I think the loan originating system, there's massive transformation happening. If I take our company right now, we are in the process of transforming ourselves in terms of the loan originating system, because speed to market is critical. And if there are any changes, we should be able to do the changes on the fly rather than go back with change requests, which you don't know when those change requests will be attended to. So I think clearly the loan originating systems have to be nimble, fast, agile. as regards the whole partnership, and this is what I'm seeing in various companies, it has to be a hybrid model. So while you depend on the partner, you have to have a few IT folks in house who are experts, who can work with multiple partners in being able to deploy these systems and get these systems working. And you'll have, in course of time, you'll have multiple partners, multiple IT vendors working on different parts of the platform. So it really has to be a good architecture provided by a solid partner, but you also need not a big IT team, but a few IT folks in the company that are able to channelize that and make that work from a business context.
The ones who hold the fort together for
The
you.
ones who hold the fort. And I think people miss that. People get too caught up with the fact that we don't want to create a large IT setup and tend to depend completely on the partner. And when something goes wrong, then you are left high and dry because you've not perhaps developed that expertise in-house to manage that complexity. And expertise is not just business analysts. You really need IT folks who have that programming language to be able to develop that if it has to be developed as a layer on top of the core architecture. So I think that's the way we are looking at it in terms of the build versus buy. The other question you talked about the various technologies. I think earlier, if you see, we used to depend a lot on fintechs and on other companies for the credit scorecards. I think scorecards were developed externally. Now I don't think you need to develop it externally. If you have a robust machine learning in-house and you have a very strong data science team. So I think data science is become a very important function as a part of any organization.
Correct.
And data warehouse is the start for that data science. So one is creating a robust data warehouse and then having a strong set of data science people within the company who can make sense of that data, drive the algorithms using that machine learning and plug that in through an API into a core originating system, which can then help real-time automation of decision making and help possibly avoid some of the mistakes that happens because of the lag of applying a scorecard and actually taking a decision on that. So I think machine learning and the data science along with a kind of a nimble-footed business rule engine is becoming an absolute requirement. It's must-have. It's no longer a nice-to-have. And of course, artificial intelligence is then being able to apply that intelligence on top of that to be able to upsell, cross-sell, hyper-personalize the transaction to customers. So that's how artificial intelligence is also kind of getting built in. I think machine learning has become absolute critical. Artificial intelligence is still taking shape in many companies, and I think all of these technologies are only going to get better over a period of time. The other thing is on the customer service part, where bots is becoming the new norm of interacting with customers. And we've started using bots, and we see 30-35% of our customers are actually bot called, right? And where we don't have a human intervention. So now we are actually developing regional bots to be able to call them in their own language, the language that they understand. To be able to further increase penetration of bots. So I think the whole customer service process also, in terms of both the RPA, automating some of the processes that were earlier very manual, and using bots to interact with customers is something that people have started using. I don't need to tell you about payments. Payments, I think, is talked about so much. It's now there over the last 2-3 years. I think pretty much every customer is now into the payments online. But these are the other technologies that are coming in place.
Fantastic. Sreejit, looks like you're checking all the boxes as far as what you should be doing as far as a technology leader in your company is concerned. And I think real pearls of wisdom. Thank you for your time. We would be, in fact, I'm honored to have spent this time with you. It's been great. Thanks again. Take care. Stay safe.
Thanks, Abhi. It was a pleasure chatting with you.